Today has been a reasonably quiet day as far as data is concerned. That said, we did see the Euro-Zone PPI release ahead of that all-important ECB meeting this Thursday. Well, on the line to discuss this with me in more detail is Marco Valli, Chief Euro-Zone Economist at UniCredit in Milan. Marco, thanks for joining me. Now, I know all eyes are on the ECB rate meeting later in the week, but can you just run through with me your analysis of the PPI data today?
Yeah, Euro-Zone PPI in July was up 0.4% on a monthly basis, which is a couple of decimals higher than we and consensus had expected. On a yearly basis, the rate was stable at 1.8%. I think the upside surprise relative to our expectation was mostly driven by the energy component, which was up a strong 1.6% month-on-month, while all the other components, the so-called core components, remain quite moderate. PPI ex energy was up only 0.1% month-on-month, with the yearly rate stuck below 1%. So the overall message is that energy is starting to put some upward pressure on PPI, and from here PPI should reaccelerate due to these energy-driven pressures. But the core component of the PPI remains quite subdued and generally well-behaved.
Marco, just briefly tell me a little bit more about growth indicators and price indicators. Which is more important and why? Also, what should we be looking out for from this data in the coming months?
So certainly what we need to look more closely at is growth data. Growth data like the PMIs, the IFO. Those numbers are certainly more important to understand when Eurozone will eventually start moving out of this recessionary mode. In terms of PPI, I would say that, for the time being, the picture is one of moderation on the core components, which certainly is consistent with this picture of modest or negative GDP growth. But for the time being, given that price indicators tend to lag economic and activity indicators, I don't expect the big signs and signals coming out of the PPI. I would focus more on growth indicators, and then obviously price pressure we need to follow suit. And if we do see some recovery in growth indicators, as we expect starting in 2013, then core pressure will slowly start to bottom out and then pick up some momentum. But this is a matter of at least a few months' time, not in the very near term.
Finally, looking ahead to the important ECB meeting this Thursday, Mario Draghi has been frustrating the markets of late, holding back on releasing any new details really about QE or rate decisions. What question would you like to ask the ECB, and what information would you hope to receive from them?
I think that this particular data will not change very significantly the assessment of the Governing Council. What will be interesting to see is by how much the ECB raises its inflation projections for not this year, but mostly next year. In 2013, 3 months ago, the ECB published inflation forecasts, which from our point of view were too dovish. Now, also due to the Spanish VAT hike due to kick in September, the ECB will have to revise, and also higher energy prices, the ECB will have to revise higher its inflation projections. So the big question mark is by how much they will push up their projections. Currently, here at UniCredit, we expect inflation next year to be about 1.9%, while currently the ECB expects 1.6%. See that they will have to revise up their numbers, and so this may probably be somewhat of a hurdle to the expectations for a further cut in the refi rate. Against consensus, contrary to what consensus is expecting, we do not think that the ECB will cut rates this week, and probably the uptick in inflationary pressures, in part driven by indirect taxation, will play an important role to keep the Governing Council on the sidelines for the time being.
Okay, thanks for joining me, Marco. Marco Valli there from UniCredit. Well, that's all we've got time for here on Dukascopy TV for the moment. Don't forget to keep checking back when you can for the latest updates and interviews. Until next time, though, goodbye.